Thursday, September 4th. Let's level up. Market came in this week with a continuation of the down move. We hit into support and now rallying. We're basically back to the highs in the ES. The Qs are a little bit weaker, but we'll talk about that in a minute. As far as the VIX goes, they did give it a run. It did stall at the 200 and 100 MA confluence. That 100 MA in particular has been key resistance. I think you can just use today's high of day at 1635. Anything above that would end the one time frame to the downside. On the downside, 1470 and then 1430 have been some key support levels. Usually after a big bad event, volatility should crush. If what should happen doesn't happen, meaning volatility goes higher, don't ignore it. However, we have seen these big moves into key data points, and particularly onto Fridays in up markets, and there have been liquidation breaks. So the market has now rallied into the jobs number, so I do worry about liquidation break potential, the proverbial Costanza trade. At 8:30 a.m., we are going to get the jobs report. There will be an initial spasm. You could use that 5 or 15 minute candle. Anything above it is bullish, inside of it is neutral, below it is bearish. Super simple. As far as the ES and the NQ go, ES is coming back up to the 65.23 all-time high. We're basically just under it now. We may even make a new high while I'm recording. If there is a liquidation break, 65.0875 to 64.9625, basically 6,500 needs to hold. If it doesn't, we'll probably repair today's rich close at 64.3875 and then retest the next potential support zone down at 64.53 quarter to 64.68 half. But generally, 6,500 is going to need to start holding. It wouldn't surprise me to see it still have some profit taking though. As far as the Qs go, anything above 23,587 half to 23,671 remains bullish. If there is a liquidation break, it'll likely repair today's rich close to 23,536.50. We did repair the prior day's rich close already at 23,411, and there is still one to repair down at 23,198. The apples to apples on that, by the way, in the ES would be 64.46 quarter and 64.0725. So basically, if 6,500 can't hold, do we go back on the $100 table and go back down to 6,400? Very possible. But if 6,500 does clear, do we go to 6,600? Either way, probably on the $100 table. As far as SPY goes, very solid close today, basically at the dead highs. If there's a pullback, 646.19 is the reference breakout that we had used from the 815 candle. Bulls will need to hold that on dips. Anything above it remains bullish. Anything below it, to me, gets incrementally more bearish, possibly for a retest of the 20 MA at 642.24. On the upside, the reference high from 828 is 649.48, so 650-ish. If we do keep going, the 2 times range that I've been targeting on the upside is 658.82. We could get that kind of a blow-off move. It's interesting, too, with the Qs lagging, although they make a little bit of catch-up now. We are seeing Apple, we are seeing Google, and now Amazon coming back to life, and after hours, AVGO, Broadcom, had good earnings. That could negate the SMH mini head and shoulders, but let's not get ahead of ourselves. We'll get to that shortly. Qs are right up against resistance here, at least as far as the RTH session goes. We're actually a little bit above it in the after hours. So bulls there on dips would need to hold 574.63, which is the 731 reference high. Remember, in the SPY, we're well above that. In the Qs, we're not. If that does continue to the upside, we could get back up to those 583s, which is the reference all-time high. Shorter term, I would be trimming profits around 578. That's the reference high from 828. As far as SMH goes, we have seen a little bit of a head and shoulders. The neckline range that I've been using is 279.19 to 283.07. Anything that stays within that range is still okay. Below it gets very bearish. Above it, fine, particularly over 283.07. In the after hours, we're trading at, as of this video, around 292. The 20 MA is 293.75, so that is a key short-term pass-don't pass line. To negate this pattern, use the right shoulder at 300.78, or be a stickler and say over 302.98. If we get over the 302.98 and hold, we'll probably see 314.76, which is the 2.618 of the range. The aforementioned AVGO, the head and shoulders there is completely negated. As long as we're over 317.38, the bulls are still in charge. If there is a liquidation break below there, I think we'll see 311. That is the absolute must hold, but I would use 317.35 here. If we do keep rallying to the upside, the yellow channel high here is 331.59, so maybe pepper out some orders up there if you're long. I think you could also use the opening 5 and 15 minute ranges on this. Above them bullish, below them bearish. Remember, you always want to be above the after hours high, at least in the RTH session. That guarantees pretty much a move still higher. The initial pop high before the pullback was 319.98, so I think short term you could use that. but we would need to clear 326.24, which is the after hours high. Anything above that, I think, continues going. I think this move will catch a lot of people off guard, by the way. Nvidia still looks okay, but bulls there do need to get over 171.86. So far, the anchor VWAP and the 2-day range has been holding at 170.73. As long as that holds, we're still kind of okay. Below there gets incrementally more bearish. I would feel better if we could get over 20 MA, which now may be resistance up at 178.46. So do pepper out some orders up there if you haven't trimmed out of this yet. Amazon, nice gap today. Could be a pro gap. I think as long as it's over 234.08, which is the reference high from 8:15, it's fine. We'll likely see the 236s. We're almost there in the after hours. If that can clear, I would say there's probably some resistance around 236.63 because that's the reference high from 731. So there should be initial sellers there. But if that does clear, we could pave the way to 242.52, which is the old reference highs. Apple's still hanging in pretty strongly. Anything over 239.50, I think, can continue to run. 240.65 is my initial target. After that, it's 247.19 and 250. Ultimately, we may see 260.10. I do think that there will be a pump still into the iPhone event, which is, of course, on the 9th. Let's keep an open mind. Probably going to see higher prices into that event. I usually like to sell a day or two before it, but I'm not necessarily sure we're going to see a huge sell-off because we're really kind of far away from the all-time high. My guess is dips will be bought, and then maybe it recharges into the actual iPhone launch. Now, if those numbers are good, the stock could propel still higher. I would still think now that dips will get bought, though, because this could be a catch-up play. Google's still acting really well, had a bit of a dip today early, but then closed on the highs. Anything over 229.75, which was, of course, that 9.2 spike high, remains good. I'd be careful below 227.03. I am targeting that 2.618 on the upside at 246.76. So Google still looks pretty good. Dips likely will get bought there now that they've gotten through that antitrust business. Tesla saw a little bit of strength with that robotaxi app launch. I think that the bulls are okay there as long as the 319.03 to 325.10 holds. We have seen resistance at 351.39 to 357.54. I think it's just trading between that range, and we'll have to wait until see how it breaks out from. Gold's still acting pretty well. We do have a potential secure high here, though. I'd be careful below today's low at 325.35. I would be a little bit of a trimmer up here because we are near channel highs. Ultimately, this may see 340.348, but I would be a little bit of a trimmer here. Pullbacks to that 317, 316-ish area, which had been a prior resistance, is likely going to be support now. That could be a right or right out buy if there is a dip. As far as Bitcoin goes, trading between some key ranges here at 108,960 to 110,150 on the lower end of the range, and then on the upper end of the range, it's 112,345 to 113,045. So one of those needs to break either up or down, and I think it's probably a go with. If it can break to the upside, 115,000, 115,635 up to 117,610 is the next resistance. On the downside, we'd likely be targeting those 105,000s and possibly 100,000s if there's a larger break. Generally speaking, markets are up a lot already. We're back to reference highs, and we're coming in on the highs to the jobs report. If there's a spike, traders may lock that in ahead of the weekends, but it wouldn't surprise me to see some type of a liquidation break, at least initially. I think that it's a good idea to lock in some gains after big up moves, particularly ahead of weekends. This week generally was thin volume because people were still away, I think, for the holidays, although today kind of felt like the first big day back, particularly traffic-wise. I think next week, carrying forward, we can use the jobs day range similar to how we use the Fed day range. We could be long above it, neutral inside of it, short below. If we want to trade intra-range, you could use the jobs day VWAP, incrementally bullish above, incrementally bearish below. Like and follow for more.